Good morning and welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. We're diving into a packed session covering everything from global geopolitics to cryptocurrency trends and technical analysis. Let's start with the headlines shaping markets this morning.
Thanks, Maya. Markets are certainly buzzing this morning, especially after news that Japan plans to deploy missiles near Taiwan. That's escalating tensions with China significantly.
Indeed, Japan's defense minister visiting Yonaguni Island and announcing those missile deployments comes amid heightened rhetoric. Despite this, markets seem largely unfazed, for now. Asian stocks and U.S. futures are climbing, driven by hopes of a December Fed rate cut and progress in Nvidia's chip sales to China.
Absolutely. Traders are clearly focused on monetary policy and tech developments rather than geopolitical flashpoints, at least in the short term. But let's not ignore the ripple effects these tensions could have later.
Switching gears to commodities, we're seeing UAE property developers raise billions through innovative funding tools like sukuk bonds. Bloomberg reports that issuance has grown more than 12-fold to $6 billion since 2021. With property prices rallying 70% since 2019, developers are sitting on profit margins exceeding 40%.
That's remarkable growth, Maya. It reflects strong investor confidence in Dubai's real estate sector, but also raises questions about sustainability. High margins are great for developers, but they might signal overheating in certain segments.
Let's turn to technical analysis now. We've got several key pairs under scrutiny. First up, Bitcoin on the daily chart with the Stochastic Relative Strength Index strategy. Eli, walk us through what the indicators are telling us.
Sure thing. Bitcoin is currently showing a strong downtrend, with the average directional index above 47 and the negative directional indicator significantly higher than plus directional indicator. The Stochastic Relative Strength Index has just entered overbought territory at 81.41, suggesting a potential pullback. Meanwhile, the moving average convergence-divergence histogram is contracting, hinting at weakening bearish momentum, even though the overall trend remains bearish.
So, despite the overbought reading, we shouldn't expect an immediate reversal.
Exactly. Until we see a bullish crossover in MACD or a break above key moving averages, the path of least resistance is still lower. Volume is also extremely weak, which makes any price action suspect.
Turning to another major player, Solana, we're looking at a Fibonacci retracement strategy. Where does the technical picture stand here?
Solana's price is stuck between the 23.6% and 38.2% Fibonacci levels, indicating consolidation. The relative strength index is neutral bearish at 40.14, but Stochastic Relative Strength Index just hit overbought at 90.24. This mixed signal suggests caution. A breakout above 138.90 could target 145.20, but below 131.11 would signal deeper weakness.
Interesting. And what about Ethereum? The buy-hold-sell indicator shows a strong bearish trend. Is there any hope for bulls?
Ethereum is indeed in a strong downtrend, with V1 consistently below V2. However, the moving average convergence-divergence recently crossed above its signal line, and the histogram turned positive. That's a potential early reversal signal. Though, relative strength index is still below 50, so we're not out of the woods yet.
Let's check in on a stock making waves, Nvidia. The Smart Trend Indicator on the 4-hour chart reveals a clear downtrend with lower lows and lower highs. Can you break this down for our viewers?
Certainly. Nvidia has formed a descending resistance pattern, with each rally failing to reclaim prior highs. Volumes spike during the initial breakdown, confirming the strength of the move. Until we see a higher low and higher high structure, the bears remain in control.
Before we wrap up, let's touch base on gold and metals trading. Are precious metals benefiting from the uncertainty?
They certainly could be. While we don't have specific data today, historically, geopolitical tensions and dovish central bank policies tend to lift gold prices. If equities stumble due to global risks, look for safe haven flows into metals.
Great insights, Eli. To recap, Japan-China tensions simmer beneath calm markets, UAE real estate booms, and crypto charts show continued bearish setups with some early signs of momentum shifts. For tomorrow, keep an eye on Fed commentary, any escalation in Asia, and key technical levels across Bitcoin, Ethereum, and Nvidia.
Agreed, Maya. Stay disciplined, manage your risk, and remember, the market doesn't care what you think. It only cares what it does.
That's a wrap for today. Thanks for tuning in, and we'll see you next time on Market Pulse.